Good morning, good afternoon, and good evening. Welcome to our first Rethinking webcast, the DNA of Next-Gen Banking. This webcast is part of a thought leadership program brought to you by Thought Machine. Through this Rethinking program, we strive to cover a variety of topics facing the financial services industry today. The contents will be delivered by industry leaders and subject matter experts via various channels such as webcasts, white papers, and video interviews. I'm Robin Jiang, Director of Marketing at Thought Machine North America. And I'm honored to be your host today and be joined by an amazing panel of industry leaders coming from diverse professional backgrounds, each with their own unique industry experience. Before we start, I'd like to cover a few administrative items. We will be taking questions throughout the webcast. Please use the Q&A window on your online dashboard to submit your questions. We will do our best to address them all. In case we run out of time, we will certainly follow up with you accordingly after the webcast. There will be polling questions planted throughout the session. All those questions are related to the topics that our speakers will be covering. So they're really a way for us to engage audience participation in our discussions, and we welcome your comments. The slides will be sent to you via email after the webcast, and the replay will be available on our Rethinking website, www.thoughtmachine.net/rethinking. On this webcast, you will also be able to find schedules for the upcoming webcast and other interesting thought leadership assets from Thought Machine. Finally, as I mentioned, this is our inaugural webcast, and we want to know how we have done and how we can improve. At the end of the webcast, you will find a very brief survey, only 6 very short questions. If you can stay on, provide your comments, we would greatly appreciate that. Whether it's about the delivery, contents, or topics that you simply like us to cover in future programs. Now, without further ado, I'd like to introduce our star panel today. John Kang, Head of Business Development for Banking and Capital Markets, Amazon Web Services. Paula Papanicolaou, Executive Director, Global Head of Innovation, Intesa Sanpaolo. Brian Dempsey, Director of Partnerships, North America at Thought Machine. Now, I'd like to go around and ask each speaker to give a very brief, quick introduction. John, can I start with you?
Yeah, thanks, Robin. In my role at AWS, my team gets the pleasure of working with our customers globally across the banking and capital market sector, very much helping them leverage AWS services to accelerate innovation and really derive business benefits from adoption of cloud. Like most members of our financial services team, I'm formerly from industry, so 25 years of experience operating both in the compliance, kind of operational and business space. And I've been here at AWS for a little over 4.5 years.
Thank you, John. Paula, can I pass it to you?
Thank you, Robin. Hello, everybody. I'm Paola. I lead the innovation department in Intesa Sanpaolo, that it is the largest Italian bank. And the mission of my department is mainly to bring innovation to accelerate our digital transformation, mostly to serve better our customers and to review our internal processes.
Thank you. Last but not least, Brian.
Thank you, Robin. Brian Dempsey. I lead partnerships in North America for Thought Machine, as Robin mentioned. In my role, basically drive out across strategy consultancies, delivery partners, tech vendors, and cloud consultancies, cloud partners, leading and driving the sales and the delivery enablement of those. Joined Thought Machine in March of this year when we opened up our North America office and started to drive the expansion here. And prior was at Deloitte Consulting for 9 years, where I helped drive our next-gen digital banking practice.
Great, thank you again. Thank you all for joining us. Really honored to be with you today. Here is a quick snapshot of today's agenda. Our webcast will be delivered through 3 segments. First, we will start with an overview of the banking industry from both global and regional perspectives. Then we will delve into the main content for today, core banking. We will discuss the evolution of core banking systems, the challenges and opportunities banks are experiencing today with their core banking platforms. In the final segment, we will discuss various approaches that the banks are taking to modernize their core. Now, to kick off today's discussion, John, can I start with you and ask you to give a macro global overview of the banking landscape today?
Oh, certainly. Certainly, the digitization of banking has been sort of an ongoing process for years now. But over the last 2 or 3 years, I mean, there have been some real accelerants to those efforts. First, I think you have to look particularly to Europe with the availability of digital banking licenses, and probably equally important with the move to open banking and open finance regulations, really drove a whole new set of neobanks and digital offshoots, really looking to take advantage of the opportunity to leverage those digital licenses in a net new market. And so you can look at sort of startups like Starling and Monzo and N26 as new entrants to the industry. And what was interesting from a technical perspective is because they were starting with blank sheets of paper, essentially from a business architecture perspective, they were very much kind of microservices oriented. And that gave them some unique business advantages, the ability to not only act as a bank, but also a channel for fintechs to offer services to their customers, but also to take sort of best of breed applications within their own ecosystem and offer them out to competitors that worked in other markets. So you saw this beginning development of really an open ecosystem, allowing banks to kind of operate in different ways. And so we've seen that business model certainly kind of expand out to banking as a service where, firms like Solaris Bank will offer their banking services to bank institutions, or even where firms like Klarna from a buy now, pay later can be integrated in to that kind of purchase decision, really changing the way that we kind of look at how banking is integrated broadly. We think about cloud as really being an enabler of that kind of innovation because you can step in at a lower cost from a cloud perspective, since you're really paying for your infrastructure as your business use grows. It allows its perfect platform for kind of innovation because the cost to innovate are so much lower and sort of time to market is so much faster. And I think that's one of the things that's probably most surprising is how quickly firms are actually being able to kind of stand up either kind of new banks or kind of digital offshoots. When you think about Marcus launching kind of its platform in the UK, they got to market in 11 months. They estimated they saved 5 months alone just from not having to procure infrastructure because it was launched in cloud. Mox, Standard Chartered's digital offshoot, from time to kind of license approval to actually getting to market, 18 months. And really can only do that because they were able to leverage sort of a modern cloud platform on cloud with the right partner to go quickly. And just sort of that ability to kind of innovate quickly, I think has kind of been disruptive. And certainly those same regulatory pressures have moved from Europe to Asia, where we've definitely seen sort of a new wave of digital banks there. And you're beginning to see those regulations take place in Latin America. US is a little bit behind, but I think the same trends will come to the States as well. And then it would be hard to ignore sort of the impact of the pandemic in just accelerating kind of digital banking in a much more customer-focused way. Sort of the ability to, the separation of customers from their branches really forced all the banks that we deal with look much more at sort of that omni-channel experience for their customer base, making sure they could address them not just through mobile or web, but also through call centers, and kind of making that a single view of a customer experience. And then so much of that experience is now just not on the touch, but it's on sort of all the processes that support them from an automation perspective. And certainly during the pandemic, particularly with small lending programs, we saw sort of the power of being able to kind of automate onboarding of customers to make loans very quickly as important to the overall experience. And so we look at that, there's been a tremendous amount of innovation on sort of the customer engagement side. And as you look at sort of banks today, very much what allows them to differentiate is the way they leverage and use the data to kind of help personalize their services to customers.
Thank you, John. This is great. Paula, can I turn to your next? We have quite a bit on the slides and certainly love to get your view from the Europe perspective. What resonates with you the most or anything missing from the Europe perspective?
Well, first of all of the trends are extremely interesting, and I should say that all of them impact the European banking market as well. But just to add on some of the things that were said before, I believe that two key points for a bank like ours. We are a universal bank. We serve in the retail market approximately 13 million of customers in Italy. Almost 10 million of them are multi-channel customers. They use internet banking. 6 million of them, they use our app, just to touch on the omni-channel experience. What I think that can make the difference, and one of the most important evolutions in the retail banking, is probably the real-time customer insight. Because it is something that brings the idea to the customer that, they have some personal advice. So real-time insight gives the opportunity to a client, to have a personalized offer just in the moment when they need the thing that they want to buy. This is an experience that has been created from the GAFAs. So the idea that you need something and in that precise moment you can access it, you can purchase that, it can be a product, it can be a service, and so on. Of course, this means, if you look at on the back end, from an IT perspective, this means a huge revolution in the systems, because it means you need to have your systems working all the time. It means you need to have, all your data has to be exactly updated, and being able to serve the client in that precise moment through any type of channel. It could be your app, it could be your, internet banking, it could be your call center or your branch. So the importance of that has to do also with how we can evolve our services so to be also, user-friendly. Banking products are not the easiest products or services to sell through internet. They're complex, the contracts are complex, you need to give a good visibility of what a consumer is buying, and so on. So there is lots of complexity there that need to be made simple for the client in order to serve them better. And I believe it is, and it will be, a huge trend for the future. So driving, satisfying the personal need of every single customer in the retail banking, which means making, going from mass market to personal banking, and letting the customer enter in contact with the bank and buy a service whenever they need it, have a simple offering, very well understood for the clients, and probably also the right pricing, let's say, which is another thing that is extremely important. Then just to continue on that and, continue on the story, this means also that you need to develop new competencies and new profiles also in the bank. And this I link now to, the talent shortage. And we can see it in the IT, but we can also see it in the business in some cases. I believe that our industry, when you start from a traditional bank like us, we have over 100,000 employees. This means you need to think of how to evolve also, your people, how to make them, involve in their competencies, evolve in the practices we use, evolve in the tools we use. And this is also transformation that you have to do in a case of a bank like us. You have to do while you're still keeping alive or your legacies, your old systems and everything. Because what we see today is that we have, a number of customers that are highly digital. They expect this, omni-channel real-time experience. But then we have another relevant number of clients that are still traditional. They still want to go to a branch. They still want to talk to an advisor face-to-face. And so you need to do both of these things in the same time, trying to kind of anticipate, the new digital world, but keeping alive also the older traditional world. It's a big challenge, huh?
Very interesting. That certainly keeps your day interesting, I take it. Now, Brian, I'm going to turn to you. As a management consultant, you have been working with the banks in various stages of their transformation project. What typically are some of the issues or trends here we have that drove them to you to ask for your help in the first place? love to get your, especially from the US perspective.
Absolutely. So Paula hit on two of them right out of the gate, the insights, the talent shortage. I think some of the other ones that are top of mind when banks, both big and small, have come to me in the past. So the top left, the digital product piece. So need to offer innovative product offerings to basically enrich existing customer experiences. So everyone right now, from a customer standpoint, is expecting hyper-personalization as segment 01. And so banks are determining, can my existing tech stack get me there? So a lot of them are finding that no, they can't. So let me slice off, whether it be, a front end, a back end, et cetera. So they're looking at improving their digital product offering. One, another, it's all about cost. So the pandemic has really driven cost pressures and the increased need for automating back office functionality. So we're seeing with more digital offerings, you're able to reduce your efficiency ratio, your cost to income ratio in the US from 60% to 40-45% when you're at the end of the day done with your transformation. So cost pressures, switching from a heavy CapEx model to a more lightweight OpEx model, pay for what you basically need and when you need it, is one big trend. The data, the single source of truth, that's a big one. Banks want to be able to have all their data consolidated, whether it be customer, product, et cetera, and that will drive those insights that Paul had mentioned. And then lastly, the open architecture. That is a key one that is needed in parallel to digital product proposition. Effectively, what we'll talk on later, hollowing out the core, but microservicing your architecture so that you can plug and play various capabilities throughout your bank ecosystem. So those are some of the key trends that I saw and continue to see in North America.
Great, thanks, Brian. Before I move on, I do want to have a follow-up questions, right? We've been hearing a lot about open banking. It's regulated in the Europe, not yet in the US. But recently, the Biden administration issued an executive order asking the CFPB to develop rules giving consumers full control of their financial data. And it's being conceived by many in the industry as the precursor of potential regulation for open banking in the US. Love to see, what any of the speakers have any take on this matter, because without the regulation, open banking has been left to interpretation by many, at least in the US, right? Data portability, which some of you have touched upon, integration with third-party systems, or simply just infrastructure flexibility. So Paula, John, and Brian, does anyone like to make a few comments about open banking? How is that related to the trends we're talking about it here today?
Robin, I can start if you want.
Sure, Paula.
Sure,
sorry. I can start giving, a European banking perspective. So, that we have already implemented PSD2. And just to give some concrete examples, first of all, I think it's very much appreciated from the customer, the idea to be the owner of his data and being able to choose. Of course, together with this freedom comes the responsibility. We need to make sure that customers understand where they're giving their data, and because this is extremely relevant. On the other hand, to give some concrete examples of implementation of that, and to link with, real-time customer insights, for example, we've developed during the pandemic, we have developed a real-time financing for PMIs. So, fully digital, real-time unsecured loans to PMIs in Italy. It has been extremely interesting. Of course, we have done this utilizing the PSD2, and so connecting to clients' accounts in other banks in order to reconstruct, the cash flow, and so understand the sustainability of the loan through that. So it is a fully innovative model that implies not only a new process for lending money to small companies, but it also implies a fully new model of risk for a bank. And so this is a concrete example. It makes sense and it's very useful. But again, as I said, big opportunity, but at the same time, we need to make sure that the customer understands where he's giving his credentials, because it is also very important to make sure that the data is safe.
Right. John, you were going to say something as well?
I think it was Brian who was trying to jump in.
Oh, Brian?
I'll jump in. Real brief. I mean, you're right. There's a lot of uncertainty around what open banking is and will be in the U.S. So that creates an opportunity as well for banks. So what I'm seeing is banks, some of the more leading edge, adopting, I'll call it an interoperability layer, bringing an API gateway that will allow open architecture so that they can open up their platforms and bring in some of the other leading fintech in the space. So what that does is it transitions them from a best of suite type offering to a best of breed approach. And that's where I see, in the absence of the regulations here in the US, and while those form, that's where I see the market moving here.
Thank you. Okay, now I'm going to move to our first polling question today. Again, all the polling questions here are related to the discussions by our speakers. So they're simply there for us to also engage our audience, and we certainly appreciate your response. And you should be able to see the polling questions in a pop-up window. Please take your time. I'm going to move on while we wait for the polling question results to come in. Oliver, can we move to the next slide? Okay, here we are. I'm going to share some, while we're waiting for the results to come in, I'm going to share some interesting results from a recent survey by American Banker called Innovation Readiness, sponsored by Thought Machine. A little background, 30% of the survey respondents are global banks with assets of 50 billion and above, so essentially tier 1, tier 2 global banks. The rest of the 70% are US-based banking institutions. I put up this data here because I find it very interesting. It actually resonates pretty well, especially to what Paula and John, you both said. You talk quite a lot about customer experience, customer satisfaction. Here, customer satisfaction is rated as the #1 driver of the bank's innovation efforts. Not only it takes a top spot, it really eclipses all the other priorities, such as operational efficiency, cost savings by a pretty wide margin. So Paula, if you don't mind, I'm going to come back to you here a little bit. Granted, the survey was conducted in the US. If it were conducted in Europe, would you expect the results to be quite different or pretty much the same? Love to see if you can elaborate that a little more.
Not really. I think the results would be pretty much the same, honestly, no surprises here, because I really think it's all about the consumer. It's all about the customer. So I believe that the latest innovations and trends in our market are putting, again, the client in the center, which is the most important thing. We spent several years to create, physical spaces and somehow barriers at the end that the customers had to, live with. But now the digitalization, technology, and omni-channel put, again, the customer in the center. And so what drives everything is the customer satisfaction, because it drives results, it drives, efficiencies, and so on. And of course, to have a better customer satisfaction, you need to improve your operations. They're so much related. And all the rest, I think it links with that, because if your customers are happier, it means they have, a better NPS scoring with you. It means they are satisfied and they, have a better cross-selling and so on. So, the EBITDA and all the rest comes together. So I really think if you did the survey in Europe, you would have pretty much the same responses.
Very interesting. Thank you, Paula. Let's see the polling results, because our audience today are really from around the world. Very interesting here. We get speed to market, customer satisfaction, and new revenue stream via product innovation. So many ways they are really related, right, Paula, from what you just said. So with that, I'm going to start and move to the next. Sorry, Paula, go ahead.
No, sorry, I was saying that speed to market and new revenue streams has to do again with the customer. It means you want to serve them better and be quicker in your responses.
Right, great. So now we're going to move to the second segment of today's session. I think I'm going to need a little bit of a technical help. Okay, great. Thank you, Anika. Now, thank you, Paula, John, and Brian, for your insight. That was very helpful in setting the stage for today's main discussion, core banking, the foundation that powers the day-to-day operations of banks and all of our banking products and the services run on. Brian, can I ask you to be the historian here and take us through a brief history lesson about core banking systems, particularly the progression that ultimately led us to many of the challenges the banks face today? Brian?
Sure. Let me give you a whistle-stop tour here. So 4 real generations of core platforms over the course of the last, call it 50, 60 years. So Gen 1, think of this early 70s, trying to service the branch channel alone. So what that meant is mainframe-based, people that only coming into branches, there was no other available channel. So early days, that was Gen 1. Gen 2, starting in the mid-'80s, that's where additional channels, ATMs, some second shift call center come into play. Remained mainframe-based, thin client wrapped around it where it's needed. There's a lot of times either multi-year contracts from a third party who is developing these solutions. And what we've seen that even these second generations are in place today, and those cores that were developed in the second generation time period no longer look the same after the implementation. One example what we see a lot is Hogan being still in place at banks, but it no longer looks like it used to look. Gen 3 that came around, the advent a little bit more 24/7, 365. So online coming in, you're seeing where mainframe, some functionality is moved into more heavier servers, sliced off of mainframe, having to serve customers more where they are and when they want it. So starting to move away from a one-stop shop solution, although there's plenty of that going on. When we move it even further into the 4th generation, starting to see a chasm between 3rd and 4th gen. So 4th gen, it's more of a cloud native offering, much more customer focused. It focuses on every customer, wherever they are, every channel, globally and even regionally. So these solutions, a lot of them are exclusively microservices based. They adopt, an important thing, they adopt an ecosystem approach, or mentioned earlier, a best in suite. This approach that banks typically take with 4th gen is a best in breed. So they'll take a headless core with a front end and a payments platform and a transaction monitoring as just small examples. Couple those together, maybe offer a new offering on a new tech stack, or what they'll do is they'll stand up and migrate customers over time to those. So one of the things that the 4th gen really offer is the ability of data share. So the real-time mode that we hit on it from a trend standpoint. So that 4th gen and the real-time and the streaming data allows insights, it allows fraud transaction monitoring, and it allows companies to keep pace of the change that's required, both from a regulation standpoint and also from a customer standpoint. I think the root of it is really the core. What can the core do to support the rest of the bank?
Thank you, Brian. With that, I'm going to take us to the second polling question to our audience, like to see from our audience here. Please select one that best describes the core banking systems that your organization uses. 1st generation, all of our core banking systems run on mainframe. 2, we're lifting our core banking systems and moving them to the cloud. 3, we're building or implementing a new core banking system in the cloud. 4, we're building or implementing a hybrid core banking system, a core cloud or / on-prem model. 5, don't know. While we wait for the responses to come in, we're going to move to the next slide, which is really the most important part of today's discussion. Now, understanding where we have come from, where we are now, and what we will be up against. Again, thanks, Brian, for the great history lesson here. I'm going to turn this to our speakers, all of our speakers. In your mind, what is a perfect state of a next-gen core banking platform? I know it's a pretty big question, so we may take a couple rounds to get through all of the content here. Paula, can I start with you?
Sure, Robin. Well, I think, of course, all of them are relevant. So that's not an easy question to answer, but then I can just, comment a couple of them. So real-time data, always linking to, the customer insights and, personalizing the offer. I think it's absolutely core. And then, of course, this has to do, again, with, hyper-configurable. Because when we say we want to make, a real-time personalized offer to the client, this means you need to have, to be able to evolve your offering and so on. And of course, for us, that we are a very large bank, security is absolutely core. So again, I could talk over the other ones, but I will leave the floor to my colleagues to comment.
Great. John and Brian, who would like to go next?
Let me go.
John?
So
okay, Brian, go ahead.
Yeah, so 2 things. One, hyper configurability. So building out a product agnostic, basically building out a core that is to be able to support any product, any size bank, for any line of business. So that is first and foremost hyper configurability. Then the self-service aspect, so many of the 3rd, 4th gen platforms, when you look at a bank that wants to build out a new product or wants to add parameters to an existing product, they have to go back to that fintech. So they're relying on a fintech to do that. What we've done, I'll mention what we've done. At Thought Machine, we allow a self-service mode. So our product layer, financial product layer is decoupled from our core. So that's one of the key things, and whether or not there was a question around tier 1 banks. Are they ready to run a core, one of these next gen cores? So we are seeing in market a definite appetite. There's one example of a very large bank in the US. So they are considering a next gen core. What they want to do is stand it up with some supporting fintechs as well, launch some initial products on it. They are going to launch existing products that they have in their portfolio onto the new core, test and learn over time, determine that, yes, the performance, the scalability, everything that you need from a cloud native standpoint can be met, security as well. From a financial product, can I build what I need to build? Can I build my closed book, my back book that is no longer available, that the business rules no one really knows? Can I build and simulate that on one of these next gen cores? So they will prove out, test and learn that. And then they will start to migrate customers over, incentivizing them maybe through dollars or through additional features. They'll route new customers onto the new core, onto the new stack. And then over time, they'll add more products, continue the migration. And then at the end of the day, they will have all their customers, whether it be retail, small, medium business, even commercial customers across your deposits and lending portfolio onto the new core. So that's really what they're looking to do. Another area that I've seen is some of the larger banks, they'll stand up a sub-brand and test out a new digital stack on that sub-brand. And then when they are confident in its capabilities, they will bring components of that tech stack into their mainline business and the main company, and approach it that way.
Thanks, Brian. Before I move to John, there's a question that just came from the audience, which I think you pretty much answered, but I'm going to read out aloud and see if you have anything to add on, Brian. Are the new core banking vendors ready to run the core for tier 1 banks? Most appear to still be largely untested in major banks, and especially in their main franchise and operating as the sort of daily banking volumes they normally have to handle. What are the hurdles they need to cross as far as platform readiness is concerned before they can be considered a viable option?
I think I hit on some of that. They really want to prove out the scalability, the elasticity. Is the cost going to be lower than what they expect it to be? Because obviously the fundamental transformation is driven off a business case. They want security, the cloud security, and they want to ensure that that is readily available. The microservices that these fourth generations provide, they want to test out and make sure that they can hook it up to their legacy architecture if they want to, or how quickly and easily it is to bring in a complementary fintech on top of a headless core. I don't know, John, if you have anything further to add to it or not.
No, but I think, and it's probably, I think, even less scale than it is just sort of product set, right? As you look at sort of a tier 1 bank, I think what's holding kind of tier 1s back isn't so much the kind of acceptance of the new core platforms. And we may talk a little bit later, like when Standard Chartered launched Mox, it did it on, a new core platform in the cloud, has production customers. Over time, you'll figure out how much of the products it makes sense to kind of replicate on sort of the digital offshoot versus sort of the tier 1. And I think it's just that product capability over time, which is really probably where you're seeing those cores sort of needing to evolve, rather than is sort of the core scalability. I think, starting with a blank sheet of paper from a technology perspective and then deploying it on a scalable infrastructure actually gives you quite a bit of capability there.
Thanks, John. John, since you mentioned cloud a little bit, I just have a follow-up question here. As we know, there has been some hesitancy in terms of cloud adoption in the beginning. Primarily security was the concern, right? It seems like that perception, or you can call it misconception, has been gone, and the regulators around the world are more and more embracing, and to some degree even encouraging adoption of cloud computing. Can you shed some insights as what has led to this change?
Yeah, so some of it is pure technical. I think it was sort of almost 4 years ago that at least we made the ability to kind of do encryption broadly across our platform, where customers could actually manage their own encryption keys quite easily and elegant to kind of integrate in with our services. And that ability from sort of the data security perspective gave a lot of firms the comfort that the cloud was ready to start migrating kind of their workloads. In fact, it was a little over 2 years ago that Roy Joseph from Goldman Sachs presented at our reInvent conference, expressing like how Goldman decided to use the cloud as sort of their platform for innovation. And he specifically kind of talked to sort of the encryption capabilities within the cloud environment. I think you can even look at sort of big sophisticated institutions, the DTCC, the clearinghouse in the US, kind of a cloud-first organization. They actually published a white paper because they had made that decision. And I think one of the things they had pointed out was they were looking across sort of all the cloud hyperscalers about what they were investing from a security perspective. And the investments that AWS and others are making in security as a foundational, capability of the cloud, they saw that, well, at the time they were making the migration, they felt they had equivalent capabilities on-prem, but they saw over time that they wouldn't be able to invest the same amount as public cloud providers were. And then the other benefit we have is because we run over millions of customers, we deal not only with sensitive financial services firms, but also large government organizations that are also security sensitive as well as healthcare. And we can take those best practices and learnings across those industries and share them completely with the customer base. So that means all customers sort of start from a better security posture than if they had to recreate all of that on premises themselves. And firms in the financial services industry certainly have kind of adopted quite quickly, over the last decade. And so certainly there's enough examples out there of large, sophisticated firms deploying their infrastructure on cloud.
Thanks, John. Now, I'd like to stay on the cloud a little bit because it's such a broadly used term, and everyone seems to bear the label cloud. But not seems like everyone can say cloud native. So what is cloud native? Can anything runs simply in the cloud called cloud native? If not, how do you differentiate yourself, whether you're cloud native or not, and what are the benefits that come with it?
Sure. And I think this is very much sort of a view of cloud that's probably a little dated. And a decade ago, yeah, cloud may have been just sort of infrastructure like services, servers and storage that you could rent. But now there are over 200 services on our platform, high level like call centers on demand and fully managed databases, machine learning services, all where a lot of that heavy lift of managing that infrastructure as well as the operations of that are actually handled by the cloud provider themselves. It doesn't mean you don't get benefit from lifting and shifting your infrastructure to the cloud. We've certainly had banks like Santander's Open Bank or Time Bank kind of migrate their infrastructure to the cloud, very much as a lift and shift. And in the Time case, they saw almost like a 50% reduction in infrastructure spend because of it. Just lifting, it gives you the benefits of better visibility into your infrastructure, the ability to do CI/CD and deployment, as well as give you that flexibility from deploying extra infrastructure when you need it. But essentially, though, you're still leveraging sort of the extra capabilities of cloud yourself to kind of manage and patch those servers, to figure out how to best use the extra resources from a data center perspective that cloud provides you from a resiliency and DR perspective. You still are limited to the legacy applications that you have as far as scalability. Last, the costs aren't as aligned to your business outcomes as you would like, because typically you're still deploying a server in legacy software. Well, it's on demand in AWS, running a server is running a server, and you still have to pay for it. As you look at moving to sort of more cloud native services, those will naturally take advantage of sort of that extra infrastructure capability within the cloud. So if you're using something like our Aurora database, it's going to automatically use the fact that it knows we have 3 availability zones for resiliency. It'll take care of the patching for you. So it reduces your operational cost, but it also gives you better resilience. And then the pricing model of sort of what we'll call the most serverless services, the things where you don't have to do the underlying server management, align nicely with your business. So as you call, you pay. And I can give you like a really quick example of that. During sort of the pandemic, a lot of loan processing was done by having to look at new sort of tax documents to validate sort of that funds were being used for kind of employees. That was by many firms done by using some of our machine learning services that would extract that information out from the documents and kind of provide it for their service or automation. They were able to test those services, see they would work in just a couple of days, move them to production in 2 weeks, and then be able to scale up to process hundreds of thousands of loans. And then when the PPP program ran out of money and that process stopped, well, so did the loan documents, but then so did the costs, right? So it gave you quick time to market and then services that were dynamically scaled to your cost that you didn't have to manage or update or even maintain from a natural language processing perspective. So those give you so much more capabilities to align your cost and then just respond to your customers more quickly.
That was very helpful. Great to know. Thank you, John. Before we move to the final segment, Anika, can I ask you to push back the last polling results really quick? This is really encouraging. Wow, 40% we're building and implementing a new core banking system in the cloud, and 14% are working towards a hybrid model. This is great. So we'll now move to the next segment. Before we do so, we will have our last final polling questions for the day. Select one approach that applies to your organization's core modernization effort. 1, build a digital wrapper around the core. 2, hollow out the core. 3, big bang replacement. 4, build a new greenfield tech stack, migrating over time. Or 5, don't know. Now, I'm going to move on while we wait for the polling questions to come back. Each bank is different, like everything in life, right? There's no one-size-fits-all for any bank's core transformation efforts. On these slides, we have listed some of the common approaches for core modernization as we have observed through our clients around the world. Paula, can I start with you and ask you to share with us some of the approaches that you have experienced? Any examples? That would be great.
Sure. Just like you said, every bank is different. We have different histories, and to be fully honest, I mean, if we look at the European banking industry, it's mostly done of, big M&As that in the years have created, the largest banks. And then we have startup banks or new banks that try to enter the market with a new, completely new offering, maybe very specialized by segment and so on. I believe that some of the examples that we have seen are, for example, the idea of building a new greenfield tech bank and migrate over time. This is a very common example. There are several banks in Europe that have done that. Some of the names were done before. There are others. There are many examples in Italy as well. I think this is a good option, of course, because it's like if you create your own, challenger, and so somehow clients, instead of changing bank, they could, select your digital twin, let's say. So this is an approach that has worked and allows, to maintain the old and building up the new. But I also have to say that there are other examples of, traditional banks that have successfully organized this gradual migration and, renewal of the system. We are an example of that. Of course, it arrives at a moment where you have to pose yourself the question of what to do and how to evolve. But, it's very relevant to introduce digitalization in every single process. Of course, many times the obstacles that arise for, universal banks is the fact that many times, there are some type of services, some type of products that, don't allow you to be so flexible because of their nature. This happens mostly in corporate banking, probably not so much in retail, but somehow it does. And the fact that we have so many legacy systems that whenever you want to start something new, you still have to think of how to connect, your new system to your legacy, which is, a big thing to do. Another option I think that we have also seen is the geographical diversification. So there are, universal banks that have chosen some geographies where to, introduce the new and test them, maybe because they had fewer clients, they were a younger bank in that geography and so on. So honestly, there is a little bit of all of that. I'm very curious to see how the answers come up.
Very interesting. Maybe let's get the answers right now. Adika, can you push it out? Wow, very consistent, very much resonate what you, Paula, anticipated. Now, there's actually, I'm going to move to see Brian and John. I know you two actually mentioned a couple of examples in a previous a few discussions. Like Brian and John, I'd like to see if you have more other examples in other approaches that you would like to offer as well.
Sure, I have one that really to hollow out the core. And so I think there's a question around a progressive renovation. So I think of the two as synonymous with each other. So hollow out the core, a lot of big banks, they don't want to go forward with a big bang implementation. High risk, we all know what that means. Meanwhile, do they have the appetite to stand up a greenfield tech stack? Maybe some, maybe some do, maybe some don't. Hollow out the core is really what I'm seeing banks do is they'll create a interoperability layer. So think of it an API gateway they'll put in place. What they'll do next is they'll start pulling out services that are in the core. And over time, we talked through the Gen 1 through 4. Over time, cores have picked up front ends. I've seen that a global bank had their green screen front end within their core. Seen payments part of cores, fraud part of it. So they'll start slicing off functionality, microservicing it out themselves, building the functionality, or they could pull in a fintech and they'll plug that into their interoperability layer. So that will allow them over time to hollow out their core. And then when that core is down to basically the transaction engine, the headless account processing piece, that GL, they will replace their legacy core with a more fourth gen core. So I see that approach happening frequently or being considered frequently as well. I'd say that is as much of a greenfield tech stack play as well. So that's a big one. The digital wrapper, I have seen that. I don't see that as much anymore. That is only going to get a bank so far. I describe it as putting a Band-Aid on a problem, but not really addressing the root cause. So you have to put, let's say you add a digital wrapper, you have to put channel logic across in digital, you have to put it in branch if you want it there, and in the other channels, call centers. You have to duplicate functionality across, which can be costly, and it doesn't really get to the root, which is the core. I know, John, we talked about MOX previously, which is that greenfield tech stack. Any other examples that you wanted to talk through?
Well, I think as Paula said, we're seeing sort of all approaches across the industry, right? And as you mentioned, sort of like Capital One has got some great patterns on kind of deconstructing sort of the core from an API modernization and moving to microservices. You do have sort of the extreme, and there's still probably the outlier when you've just made the decision that sort of the legacy tech stack just isn't worth like continuing on. So we've even had like firms like Global Payments decide to kind of re-rate their core platform on the merchant servicer side, where there's like, okay, you know what? It's not worth the continued investment in the legacy platform just because we can't get the pace of innovation from sort of a customer and market perspective that we would like. And we've seen Bank Itaú consider very much the same thing. But I think, Brian, you've hit on, I think, what are really sort of the primary patterns that we see out there. Certainly, there are other examples of firms taking that approach. Sort of WeLab certainly, entered the Hong Kong market with a new digital banking license, very much kind of standing up that kind of net new modern core, and then using sort of the rich ecosystem partners out there now to be able to best of breed from a back end and customer interaction perspective.
Great. I actually have a follow-up question or more of a statement from an audience. I'm going to read out aloud and see if John and Brian, if you have any more comments to add. Progressive renovation is an approach many large banks are using for core replacement. It is in between a big bang approach, which is really only suitable for small banks or banks with simple offering, and the greenfield approach, which is about creating a challenge type bank. Only problem is that you're likely to end up with an extra core stack.
So I agree with that. I view that as hollowing out the core, and the last point around having multiple stacks, that is a concern. In order to really capitalize on the business case that you establish up front, you need to shut off your old core and the MIPS processing that you have to fully realize the benefits that drop your efficiency ratio from 60% down to 40%.
Yeah, I couldn't agree more, Brian. It's very much business case driven. Sometimes the cost of the extra core is worth it, depending on how fast you can innovate on your kind of legacy core system. I mean, given the amount of transformation we're seeing in the market, both from a pricing perspective, but also new services and customer experience, the decision you have to make for a certain product set and a particular customer segment is whether the cost of that legacy core is preventing you from tapping new markets that, quite honestly, at least from a tech perspective, you're not going to be able to do without putting in a modern core platform.
Thank you, everyone. Thanks, Paula, John, and Brian, for your insights. I certainly enjoyed learning from you, and I'm sure our audience do so as well. I think we come to the very end of our webcast. As we draw close to the end of our time, I'd like to end with a quote by Jelena McWilliams, because a lot what we see here really resonate with, I think, what we're hearing today from all of you. So with that, I'm going to go around just to ask each of the speaker maybe to give you, offer your parting words. What advice would you offer to banks as they embark on a journey to modernize their core? Paula, maybe I'll start from you first.
Thank you, Avinas. I think, as we said, the receipt is there is no unique, magic rule. It depends on the history of every bank, on the positioning they want to have in the market, and probably also on the geographies and the single markets. What is fundamental, I believe, is staying close to the customers, understanding their needs, driving them a little bit sometimes, and for sure, simplifying the offering. Of course, simplifying the overall architecture and evolving, also the capabilities of your staff, and trying to capture the transformation that the market is definitely going to have.
Thank you, Paula. John, can I have you next?
Yeah, no, absolutely. I think it's to keep an eye on sort of what it means to be a bank in the future. I think as we see sort of both open banking and open finance open up as sort of new business models, the ability to kind of take technology and offer banking services in a more frictionless manner, closer to point of sale, closer to other industries, I think it's going to change the way we view the ability to offer banking services in the market. And having that flexibility to experiment from a new product perspective and get to market quickly, I think is going to be one of the paramount differentiator between financial institutions.
Thanks, John. Brian, last but not least.
Yes, absolutely. So agree, fundamentally, the pace of innovation is changing. So this webcast is all about rethinking. So banks, to me, not already on some sort of modernization journey. They should stop to really rethink what they want their bank to be, 5-10 years from now. What do they want it to be? What do they want it to look like? So my advice is start small on your transformation. Test and learn. Stand up platforms. Could be the core, could be a front end, could be a payments engine. Stand it up, test and learn, migrate customers' products to it over time. And that will make the appetite. Some people view modernization as big, unwieldy, and expensive. If we break it off in chunks, it becomes more manageable and more doable. Start small, start now. That would be my takeaway.
Great. Thank you again, speakers, and thank you, audience, for joining our inaugural webcast today. I hope you have found the session helpful and will be joining us again in the future. Again, replay for today's session can be found on our Rethinking website, and the slides will be sent to you in the post-session email. We will be greatly appreciate that if you can stay for a few more seconds, answer 6 simple questions to provide us your feedback. We certainly appreciate, and any comments you provide will be very valuable to us. So bye now, and hope to see you again. And all speakers, if you can stay on for a few more seconds, we can have a quick post-session conference.